Hi, Niro Pillay here from Investment Rise, and I know I'm going to cop a little bit of flack for this video, but I think it's important to look at property investing fundamentals. You see, there's a lot of talk right now about the Sydney market and the Melbourne markets being overcooked. Are we in a bubble? There are so-called experts talking about property prices dropping 10, 20, 30%, even more depending on who you've been following. But the question I have is, why? Why should property prices drop so much? Someone even said they'll drop 50%, 70%. Okay, great. Tell me why. Now, generally then there comes to two types of answers, depending which school they've gone to, or which side of the fence they sit on. Number one, it is prices have risen so high, they're now affordable, they've got to crash. Okay? Or number two, the debt to income ratio is too high. They'll give you some highfalutin ratio, and because that's well above what the International Monetary Fund or World Bank thinks is acceptable, that's got to cause our property prices to crash. Okay, I get that, right? I get the theory, but let's look at the facts. Let's look at what's practical. Currently, people are affording their mortgages, and the only reason prices are going to crash is if people who have existing mortgages, the existing homeowners, not the new people buying, the existing homeowners can no longer afford their mortgages and have to sell the properties for either less than they're worth or even less than what they bought them for, that's when you really have a potential crash on your hands. Okay, so what's going to cause that? Well, the first reason why people won't be able to afford their mortgages is there's some massive economic catastrophe or disaster and people lose their jobs. Okay, yes, that is possible, sure. But right now, the global economy is strengthening. US are increasing their rates, which is a good thing for the US economy, regardless of what you think about their president. The Euro economy, Europe's economy, that's looking a lot stronger as well. So globally right now, we're actually looking quite strong. And the Australian economy, especially within Sydney and Melbourne, where there's been very little wage growth over the last few years, so labor costs are relatively low. There's no sign at the moment of some sort of major economic catastrophe. So if people don't lose their jobs, they can still afford their mortgages, then we're fine. That's number one. Number two, interest rates. Now that's obviously the unknown, because if there is a steep rise in interest rates, then yes, people may struggle to afford their mortgages. But right now, the Reserve Bank has kept interest rates at record lows, sort of 1.5% or around there. We've got inflation that's still low, and they want inflation to rise. So if the RBA increases their interest rates, then it's only going to bring inflation down, which is against what they're trying to achieve. So where's the likelihood of a steep rise in interest rates? There just doesn't seem to be a reason for it. Now, yes, of course, however, banks are increasing their rates. Absolutely, giving you whatever reason, and you can decide whether you want to believe those reasons or not, but they're increasing their rates, but only slowly. See, banks don't want homeowners defaulting on their mortgages because that obviously hurts them. So the rate of increase in rates is there, but it's slow, it's manageable for most people. Fixed rates are still at really, really low levels. So if there's jobs are stable, if interest rates, yes, higher than what they were a few months ago, but still at very, very low levels, especially looking at the long-term average interest rate in Australia, which is about 7%, why would these overcooked Sydney and Melbourne property markets crash? Personally, I don't see it happening. What I do see certain pockets, yes, where people have overstretched themselves, yes, certain suburbs absolutely will struggle, and look, oversupply, especially in the apartment market, is going to have a major impact on that, which is why, if you've seen any of my video, I'm saying, look, stay away from apartments unless you're looking at the higher end, which are in sort of more boutique areas. Again, in Sydney, you're looking at the $1 million plus range, okay? But otherwise, stay away from the apartment market. But what I think you're going to see, generally speaking, is it's not going to be a crash. Sure, price may come back a little bit. We're talking 5 to 10%, even 15%. But then they've risen 65 to 80%, even 100% in some areas. So what's the big deal? That's not a crash by any stretch. And then what you're going to see is just flatlining, with maybe prices rising with just a little bit of inflation or wage growth. Now, I know that may not sound sexy. It doesn't help people who can't afford to get into property right now because prices are not falling fast enough or to a level where they can afford them, and also doesn't help investors who want to buy for capital gain. So 3 years a lose, but that's what I see happening for Sydney and Melbourne markets. It's just flatlining, going up with a little bit of wage growth. No one really winning necessarily, which is sad, but that's what I expect to happen in the post-boom market. So let me know what you think. Do you really think there's going to be a crash? And if so, why? I just would love to know why people think prices are going to crash, apart from the argument that prices are so high already. Yeah, Sydney's never been cheap. New York, for example, is far more expensive than Sydney and Melbourne. And I was interviewed recently in a major newspaper where I said I expect that our price is going to keep rising over time. But for the next few years, in a post-boom cycle, yeah, we are going to go through some flatlining. Let me know what you think. Are we going to crash? Or are we going to go flatline? Or are we going to keep growing, and why? I'd love to hear from you. Bye for now.